Hello, everyone, and welcome to the first business day in the month of February. I am Bosin Amafaye. We're live to you from Lagos, Nigeria's financial capital. This is your Business Morning, and welcome to the most anticipated month in Nigeria's 2019 calendar. Revving up political jostlings and campaigns ahead of the conduct of presidential election on the 16th. The incumbent president, Muhammadu Buhari, and his main challenger, Atiku Abubakar, on massive cross-country campaigning for votes, making politics and elections headline grabber for the new month. Across the states, of course, a few governorship elections are taking place, like in Lagos. The contenders are also taking their campaigns not just to the streets, but to intellectuals, communities as well. So, all that will be big business, big story for the new month. Lagos Business School adjunct lecturer Dr. Doyin Salami yesterday places the elections as the #1 drivers on the list of 2019, what to expect that was at the Deloitte in Dialogue Summit. Meantime, this came overnight from the Central Bank of Nigeria. The country's Purchasing Managers Index new report says manufacturing PMI was still in positive reading at 58.5, but lower when compared to the index in the previous month, where we did about 61.1. That was the month of December. The non-manufacturing PMI came in at 60.1, indicating expansion. However, the index grew at a slower rate compared to that in the month of December. The report also contained business activity index at 61.7, up for its 22nd consecutive month, indicating expansion in non-manufacturing in January. It was just like last month, ended yesterday, but at a slower rate compared to the month in December. So we're starting this year PMI on a bit of a sluggish note. And of course, this month we're looking at the earnings reports. Big numbers expected from the second week of the month in the banking sector, with the big names expected to, of course, raise the curtain as always. So let's take a bit of what we have here into the market street. Temple Ashaji, our business correspondent, is taking a look at the month of the final trading day of January, which was dented by political noise. Temple, good morning. We finished off yesterday 1.89% on the equity side. We lost the 31,000, trying to struggle to hold on to that level, but left off yesterday. Take us through the numbers.
We've been there before, both in at 30,000, and then we went back up to 31,000. So anything can happen. Leaves room for a lot of investors to come in, bring in your retail funds, bring in your idle funds at this point in time. That's what you explain with this kind of opportunities when you see some heavy profit takers moving out of the market due to what you call the political uncertainties and a whole lot of other reasons why you might want to sell down at this point in time. But basically yesterday, we saw these marked sell-offs across the bellwethers in the market. The heavy weights in the market really went down. Dangote dropped in its share price. A whole lot of others, all the banking names, all the major banking names really declined in their share price. So we're seeing a bit of a reduction of holdings by the offshore investors again in the markets. Remember, when they came in, some analysts made us to understand that this may be for speculative reasons, and really that seems to have been what is now playing out as they now continue to react to the whole uncertainties that we're seeing in the system. That's why for about 2% loss was recorded in the market yesterday. Volume yesterday came in at 349.30 million units, and in terms of the value, we're down. We had some 3.49 billion naira, and the deals remain the same way we had it in the previous trading session. That's 4,228. Yes, all share index settled at 30,557.20 with the market capitalization or equity capitalization precisely now at 11.39 for trillion naira. Now, if you look at the month-to-date performance, because of course you know yesterday was the last trading day for January, and of course we ended negative. So if you look at the month-to-date performance, we're down some 2.78%. Market breadth yesterday was really battered. We saw 32 losers against just 8 gainers, and that's 2 losers was led by Red Star Express, in the logistics subsector of the services segment in this market, was down yesterday by 9.09%. MC Nichols and Len Africa were the two top gainers in the markets yesterday, leading the 8th gainers pack of the market. In terms of the sectoral performance, I said earlier that the banking name was really down yesterday, was down some 2.54%. We saw GTI losing some 1.6, Guarantee Trust Bank rather, losing 1.62%. ETI, that's Ecobank Transnational Incorporated, down some 6.67%. And all of the banking name losses actually contributed to that. If you look at consumer goods, a lot of investors continue to react to PZ poor earning, profit warning, and of course the poor earnings that came in from flour mills. Industrial goods, on account of the losses we saw on Dangote Cement, reacted to some kind of the numbers that we saw there yesterday. Insurance was down. Oil and gas was also down. Oil and gas down on account of the losses we saw in O&O and Eternal PLC generally. At the NASDOTC, we saw a further decline as well, 1.08%, with some volume of 1.206 million units of shares, and that's valued at just 15.1 million naira. In terms of the treasury bills and the bonds market, in spite of the liquidity level that we saw in the market yesterday, and the fact that the central bank regulators continue to see how they can be intolerant to this level of liquidity, we saw bullish sentiment on the secondary side of the market yesterday. Average yield contracted at the bond side by 8 basis points to 15%, while we also saw buy sentiments across the different ends of the curve. And ditto for the treasury bill segment of the market, even though we saw that the federal CBN offered some more than 400 billion naira by way of special open market operation, Bosun.
Yes, thank you very much. Let's get back to take a look at some of the other stories, in particular the equities market towards the end of the program. PZ Cushons have clarified and says they're not pulling out of Nigeria, and that the profit warnings issued by the parent company in the United Kingdom, PZ Cushons UK, was just about the challenging conditions, not just in Nigeria, but across Africa, but that the company is not pulling out of Nigeria. That's clarifying that. Tempo will take a bit of that with us towards the end of the program.